Good morning and welcome to today's episode of Crypto Daily. We've got a packed show for you today with some major developments in the world of cryptocurrency. I'm joined as always by my co-hosts.
That's right. Today, we're going to be diving into some big market-moving stories. Bybit has just announced that it's closed the so-called ETH gap after being hit by the biggest crypto heist ever.
That's right. The exchange had a massive $1,400,000,000 hole to fill after hackers made off with a huge chunk of Ethereum. But in a surprisingly swift move, Bybit has managed to replenish those funds and return to a 101 backing of client assets.
Exactly. This is a huge deal for the exchange and its users. Just days ago, there were serious concerns about the long-term viability of Bybit, but it looks like the team has worked around the clock to rectify the situation.
And this is especially impressive given the scale of the hack. I mean, $1,400,000,000 is no small amount of money. It's a testament to Bybit's resilience and commitment to its users that they've been able to recover so quickly.
Absolutely. Now, we'll be diving deeper into the specifics of the hack and Bybit's response later in the show, but for now, let's take a step back and look at the broader implications of this story. What does it mean for the wider crypto market?
Well, one thing it highlights is the ongoing issue of security in the crypto space. We've seen a string of high-profile hacks in recent months, and it's clear that exchanges and other crypto companies need to be doing more to protect themselves and their users.
That's right. And it's not just exchanges that are vulnerable. We've seen hackers targeting everything from wallets to DeFi protocols. It's a cat and mouse game with hackers constantly looking for new ways to exploit vulnerabilities.
And that's why it's so important for crypto companies to prioritize security. Whether it's through better coding practices, more robust testing, or simply being more proactive in identifying and addressing potential vulnerabilities, there are steps that can be taken to minimize the risk of these kinds of hacks.
Absolutely. Now, we'll be exploring some of the ways that crypto companies can improve their security later in the show. But first, let's take a look at some of the other big stories moving the markets today. We've got updates on Bitcoin's price movements, as well as some interesting developments in the world of NFT.
That's right. And we'll also be taking a closer look at some of the regulatory developments that could be impacting the crypto market in the coming weeks and months. It's shaping up to be a fascinating episode, so be sure to stick around.
So we were just discussing the ongoing concerns around crypto security and the need for exchanges to step up their game. And now we have a perfect example of this. Bybit, a popular crypto exchange, has reportedly been hacked.
That's right. According to sources, the hack occurred earlier today, but interestingly, it seems like the market is taking it in stride. Prices haven't seen a significant drop, and traders are already looking ahead to other stories.
Building on what we discussed earlier about the resilience of the crypto market, this could be a testament to how far we've come in terms of investor confidence. I mean, a few years ago, a major hack like this would have sent shockwaves through the entire ecosystem.
Exactly. And now traders are already shifting their focus to other news, like the potential Sol ETF that's been making headlines. It's clear that the market is hungry for new investment opportunities, and a Solana-based ETF could be just the thing to satisfy that appetite.
Speaking of which, a Solana ETF would be a significant development, especially given the growing interest in decentralized finance, DeFi, and non-fungible tokens, NFTs. It could provide a new way for institutional investors to get involved in the Solana ecosystem.
That's true, and it's not just institutional investors who would benefit. A Sol ETF would also give retail investors a more accessible way to invest in the Solana network without having to navigate the complexities of buying and holding individual tokens.
Of course, this is all speculation at this point, and we'll have to wait and see if the ETF actually materializes. But it's clear that traders are eager for new investment opportunities, and a Sol ETF could be just the thing to drive growth in the Solana ecosystem.
And in other news, it's worth noting that the Bybit hack is still under investigation, and we don't yet know the full extent of the damage. But for now, it seems like the market is taking it in stride, and traders are already looking ahead to the next big story.
Well, we'll continue to follow the Bybit hack and bring you updates as more information becomes available. And in the meantime, we'll be keeping a close eye on the Sol ETF story. It's definitely one to watch in the coming days.
Absolutely. And as always, we'll be here to bring you the latest news and analysis from the world of crypto. Stay tuned for more updates throughout the day.
I want to follow up on our discussion earlier about the impact of hacks on the crypto industry. We mentioned how some exchanges are still feeling the effects of these attacks months later.
That's right. And one of those exchanges is Bybit, which suffered one of the largest hacks in crypto history. But it looks like they've made some significant progress in closing their Ethereum deficit.
Exactly. Bybit CEO Ben Zhou just tweeted that the exchange has all but closed its $1,400,000,000 Ethereum deficit. This is huge news, considering the magnitude of the hack.
Absolutely. And this isn't just a claim from the CEO. On-chain analytics platform Look On-Chain has been tracking Bybit's progress, and their findings support Zhou's statement.
That's right. Zhou even acknowledged Look On-Chain's findings in his tweet, saying that Bybit has already fully closed the ETH gap. This is a big deal for the exchange and for the industry as a whole.
It's definitely a positive development, and it's worth noting that Bybit's efforts to close the deficit involved a massive $1,230,000,000 purchase of Ethereum. That's a significant investment, and it shows that the exchange is committed to making things right.
Building on what we discussed earlier about the importance of transparency in the crypto industry, it's great to see Bybit being open about their progress. Zhou has promised a new audited proof of reserves report, which will provide even more insight into the exchange's financials.
Speaking of transparency, it's interesting to see how Bybit's approach compares to other exchanges that have faced similar challenges. Some have been criticized for a lack of transparency in their recovery efforts.
That's a great point, and it's something we'll continue to follow in the coming weeks. As we've seen time and time again, transparency is key in the crypto industry. When exchanges are open and honest about their finances and operations, it helps build trust with customers and investors.
Absolutely. And it's not just about trust, it's also about accountability. When exchanges are transparent, they're more likely to be held accountable for their actions. And that's essential for the growth and development of the industry as a whole.
Building on what we discussed earlier about the impact of global politics on the crypto market, some interesting election results have come out of Germany.
That's right. The center-right alliance, led by Friedrich Merz, secured the most seats in the EU nations election with 28.52% of the vote. What's your take on this?
Well, it's worth noting that the far-right Alternative for Germany, or AfD, secured a significant 20.8% of the vote. This could indicate a growing divide in German politics, which might have implications for the EU as a whole.
I agree, and this is something we should keep an eye on. The EU has been working towards a more unified approach to crypto regulation, but if we see a rise in nationalist sentiment, it could lead to more fragmentation.
Exactly. We've seen how regulatory uncertainty can impact the crypto market. If the EU's stance on crypto becomes less cohesive, it could create more volatility for investors.
Speaking of regulatory uncertainty, I saw that the European Central Bank has been discussing the potential for a digital euro. What do you think the implications of this would be for the crypto market?
A digital euro would likely have a significant impact on the market. On one hand, it could increase adoption and mainstream recognition of digital currencies. On the other hand, it could also create more competition for existing cryptocurrencies.
That's a good point. If a digital euro is implemented, it would likely be seen as a more stable and secure option for investors, which could lead to a shift away from more volatile cryptocurrencies.
But it's also worth noting that a digital euro would be a centralized currency, which goes against the decentralized ethos of many cryptocurrencies. This could lead to a divide between those who value the security and stability of a centralized currency and those who prioritize decentralization and autonomy.
Absolutely. It's going to be interesting to see how this plays out. We'll continue to follow the developments on the digital euro and keep you updated on any significant changes.
And finally, let's talk about the potential impact of the German election results on the global economy. Do you think this could have any ripple effects on the crypto market?
It's possible. If we see a shift in Germany's economic policies, it could have implications for the global economy, which in turn could impact the crypto market. We'll be keeping a close eye on this, and we'll discuss any significant developments in future episodes.
As we wrap up today's episode, I want to circle back to our earlier discussion on meme coins and their current impact on the market. It's clear that attendees at Consensus are not thrilled about the recent rise of these tokens.
That's right. We're seeing a lot of criticism towards meme coins, with some even going as far as to say they're a net negative for the broader crypto market. The concern is that these tokens are sucking liquidity away from more established cryptocurrencies.
And it's not hard to see why. With Bitcoin stuck in a rut below $100,000, it's starting to feel like 2018 all over again. Investors are getting impatient, and some are turning to these memo coins as a way to try and make a quick profit.
But as we've discussed before, this is a recipe for disaster. These tokens often have little to no fundamental value, and their prices can be incredibly volatile. It's only a matter of time before they come crashing down.
I think what's also worth noting is that some attendees at Consensus were expecting the SEC to approve ETFs tied to top altcoins. But with the current state of the market, it's hard to see that happening anytime soon.
Yeah, the regulatory environment is still very unclear, and it's going to take a lot more than just a few ETF approvals to turn things around. We need to see some real progress on the adoption front, and that's just not happening right now.
So what are the key takeaways from today's episode? Well, first and foremost, it's clear that meme coins are a major concern for the crypto market. They're sucking liquidity away from more established tokens, and their volatility is a recipe for disaster.
Secondly, the regulatory environment is still very unclear, and it's going to take some real progress on the adoption front to turn things around. And finally, Bitcoin's lack of movement below $100,000 is starting to feel like 2018 all over again.
In terms of market outlook, it's hard to be bullish right now. We're seeing a lot of uncertainty, and it's clear that investors are getting impatient. But as always, we'll continue to monitor the situation and bring you the latest updates.
Yeah, and that's a wrap for today's episode. Thanks for tuning in, and we'll catch you all on the next one.
Don't forget to follow us on social media for the latest crypto news and updates, and we'll see you tomorrow.